Welcome to the Specialist Trading Weekly E-mini Review for the week ending April 8th, 2011. Now in today's presentation, we're going to be covering more strategy number 6 trades. If you recall, a few weeks ago I gave a webinar where I went over and explained the entry rules for strategy number 6, and I just want to continue to show a lot of our new members how much you could have gained, or at least paper trade and made some paper gains by using strategy number 6. So we're going to show some current trades with this particular strategy. But before we begin, we want to remind you we are currently in a promotion with Global Futures. Global Futures has been my broker. They're highly recommended. If you're thinking about opening up a new account, you're not too happy with your current futures broker, or if you're new to futures trading, we highly recommend that you speak to Michelle Jimenez over at Global Futures. Her number directly is 818-670-7733, and if you mention coupon code SB20, you're going to receive 20 free contracts when you open and fund a new account. So be sure and give Michelle a call and tell her that Specialist Trading sent you. Now before we begin, we please ask that you take a moment to view our disclaimer. I'm going to show you a lot of performance results using strategy number 6 this past week. But remember, we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's review. All right, just to recap the indicators that we use for strategy number 6, it's only 2. This is keeping with our philosophy of keeping things very simple. And we obviously use our buy-sell line, the 50-period simple moving average, which tells us which side of the market to be on. And we're using as our main indicator the 5-period RSI. Now this is just a standard indicator you have on virtually every charting software package, your RSI tool. But instead of using the standard default of 14 periods, we're looking back only 5 periods. So we want to change our length to read 5 instead of the default of 14. Now if you're not aware or able to do this, call up your tech support. They should be able to edit this for you. And we're going to get rid of the overbought, oversold lines, the overbought, oversold thresholds. We're going to only make one median line threshold at 50. So we're going to put our median line, that's our indicator for the RSI. And I'll show you exactly what we mean in some chart examples here. Now, once again, this strategy works best on small time frames. And a number of students have asked me, well, what are the best time frames? And in my opinion, this works best on tick bar charts, mainly because you're going to see a lot more signals, and you can kind of weed out the good ones and the bad ones, as opposed to looking at a 5 or a 10-minute chart where you might not even see a signal for the entire day. But if you want to look at minute charts, you'll still see some. So 1, 2, 3-minute charts, you'll see a lot of signals, even up to 5. But I wouldn't use anything beyond a 5-minute time frame because you may not see signals. If you'd like to see much more and more upwards and downward signals, I would suggest going to tick bars. But as a minimum, I would only use a 1,000 tick bar chart as my minimum. You can use 1,000 all the way up to 5,000 if you'd like. Okay, and different increments within that, 2,500, 3,500, it's up to you. So we're looking at Monday on the 4th. We were looking at a 2,000 tick bars here, and as we see here, here's the chart coming into the trade. All right, now looking back in hindsight, what we'd like to do, since we saw that the E-mini kind of fell out of bed towards the latter part of this chart, you'd actually want to take advantage of shorting sometime during this charting period. And obviously the best place to short would be right here, circled in red. So how could we have taken advantage of that? Well, the first thing we do is we address our first tool, our first edge, which is the buy-sell line. And we always ask ourselves, where is price in relation to the buy-sell line? And for the most part, price was obviously below. Now, even though we hugged it a little bit right here where we kind of were straddling this upper portion here, price for all intents and purposes was really below here. So we're looking for sell setups, okay? So the first thing we ask ourselves is, where is price in relation to the buy-sell line? Price is below. Now, because we're using strategy number 6, the second part of the requirement is we need to see the 5-period RSI, which is on the bottom here. This is the blue line, the 5-period RSI, and this is its 50 threshold. You see how we got rid of the overbought and oversold thresholds? We only want to have one median line here in the middle at 50. So the second part of the requirement now is that we need to see the RSI be above the 50 threshold. So we kind of have this inverse effect here. We want to see price below, and we want to see the RSI above 50. Okay? Now if those two things are in place, then we're going to look for our proprietary topping pattern. Okay, since we're going short, we're looking for a topping pattern, but not in the the E-mini, not in the chart, but in the RSI, and that's the pattern here. Okay, now if you're not familiar with the structure behind this pattern, simply go to the video learning section and watch the video titled Strategy Number 6, and I go into detail on how to spot this pattern. But what we're really interested in this pattern is the last leg, which is the down move of this pattern right here, the last down move. And that down leg on the RSI corresponds with the particular 2000 tick bar, which is right here. Okay, so do you see that? We drew this dotted line to show you how that last leg of the topping pattern corresponds with this tick bar right here. So once you find which tick bar it corresponds with, that's your setup bar, circled in blue. Okay, so what does this mean? This means that if we trade on the next bar and on the next bar only, one tick below this setup bar, we can go short. So obviously we did trade below the low of that setup bar, so we entered short at 1328.50. Okay, so this is where we're entered short into the trade. Now a funny thing happens later on once we're in the trade, because later on we see that the RSI was below, but now it goes back up above the 50 threshold, and guess what? We now have another topping pattern. So if you wanted to, if you're a more aggressive trader, you could have taken advantage of this next signal, because the last leg of that topping pattern corresponded with this bar, so this is another setup bar. So you could have taken advantage and gone short here once we traded below this setup bar at 1326. And as you can see, these topping patterns coincide with a down move in the E-mini, and it fell roughly in the next hour nearly 4 points. Okay, so these are all ways to spot how to be in sync with the trend, and in this case we used a 2000 tick bar. Now this was on Monday. Let's go on to Tuesday now. Let's look at a 1000 tick bar, and you can have 2 or 3 charts plotted on your screen and just kind of gaze, and after you do this with enough practice, you'll be able to see these signals on your own very simply and very easily looking at 3 or 4 charts. Now on Tuesday, looking at a 1000 tick bar chart, we have a setup here, and the first thing we want to ask ourselves is, well, obviously towards the end of the day the market went up. It would have been nice to get long roughly around here. So we have to find out where price is in relation to the buy-sell line, and price is above. So this means we're only going to be looking for long signals, all right? We're only going to be looking to go long. So once we have that rule met, the second rule we need met is we need to see the RSI below the 50 threshold, which it starts to do right here. Okay, so once again we have this inverse effect here. We are above the buy-sell line, but we need to see the RSI below the 50 threshold. Once those two things are in place, since we're only going to be looking to go long, we're looking for this bottoming pattern, which is right here. Okay? And on the last leg of the bottoming pattern, we have this up move. All right? This is the last leg of the bottoming pattern, and that up move corresponds with this tick bar right here, this 1000 tick bar, and this is our setup bar. So what this means is, if on the very next 1000 tick bar we trade above the high of the setup bar, we have to enter and go long, which as you can see it did. So we entered long at 1332.50. Once we enter long, this is another question that beginning students always ask me, is like, well, do I have to continue to monitor the RSI because now the RSI is above, and what exactly do I do then? Once you're in, see, the RSI is only helping us to enter into the trade. Once we're into the trade, we're no longer concerned with what the RSI does. Then we're just concerned with, hopefully we're in sync with the trade. We enter our stop and we enter our exit levels. And as you can see here, once we entered, we had another 1.5 point move to the upside very quickly in about the next 10 minutes. And then lastly, on Thursday, yesterday of this week, on the 7th, we're once again looking at a 1000 tick bars chart. And this is very simple to ask ourselves. We're below the buy-sell line, so obviously we would have liked to have gone short, and this is a nice opportune place to catch a nice quick short. So we ask ourselves, just to make sure, where is price in relation to the buy-sell line? Obviously price is below for the entire portion coming into this trade. So if price is below, we need to see the RSI be inverse to that, and the RSI must be above the 50 threshold. Okay? So once we're above the 50 threshold, since we're looking to go short because price is below the buy-sell line, we need to find a topping pattern in the RSI, and it's right here. Okay, this is the topping pattern in the RSI that we're looking for. And now we're looking for that last leg of that topping pattern, which is a down move, and that's right here. So this is the last leg of that topping pattern, and we see which bar that corresponds with, and that's this bar right here. So this is our setup bar to go short. Now a lot of people will say, well, Steve, this is nice, but how come we didn't get short up here? This would have been a better place to get short. You're right, but we do not have a topping pattern in the RSI, so we couldn't get short. We're using strategy number 6. Strategy number 6 relies on this formation in the RSI. Now the formation is right here, but we don't have it in place here. So study that formation, go to the video learning section and see how to spot it, and then just take it whenever you spot it. Don't look, in hindsight and say, I wish I could have gone short here. We're only trying to look for high probability entries. Even if you miss one, don't worry. There'll be another one coming up very shortly. So we look at the last leg of that topping pattern, which corresponds to this bar right here. So this means if on the next 1,000 tick bar chart we trade below this setup bar, we'll be going short, which obviously we did at 1324.50. And roughly in the next 5 minutes, we dropped another couple of points. That's how simple and basic this is. The RSI is giving us clues as to which direction the market will be headed. We're also listening to the actual chart by looking at the buy-sell line. So everything we needed to know was right in front of us. We didn't have to belong to any newsletter or be watching the news or looking at 10 or 12 indicators. Everything was right in front of us just with the use of 2 standard indicators and looking at the charts. All right, so recapping just those 3 trades, and there were many others. I'm not going to tell you that each one made money, but I'm not going to also tell you that there were other ones that didn't make 5 or 6 points as well. But I just wanted to show you the basic ones. Now, looking at this, that we were only looking at 1,000 and 2,000 tick bar charts. There were tons of other charts that you could have looked at, minute charts. You could have also looked at 25, 35, 4,500 range or tick bar charts. This pattern does not work as well with range bars, so I wouldn't try it with range bars at all. Okay, mainly just with tick bars and with minute bar, small minute bar time frames. But in these 2 time frames that we looked at, we had one trade that made 3 3/4, another which made 1 1/2, another which made 2 points. All right, now that's using the aggressive version. If you use the most conservative way, you would have at least made anywhere from 4 1/2 to 5 points. So just with these 3 trades alone, you would have at a minimum made 4 1/2 to 5 points using the standard tools and standard indicator. So that's why we ask you to learn the strategy, paper trade it first. If you want to trade it aggressively or conservatively, go to the video learning section, watch the strategy labeled strategy number 6. And we have numerous other strategies to learn from. Pick one that you feel best fits your trading style and then stick with that. Our edge here is consistency. We're not going for any home runs at all. We're just looking for nice little nuggets here, the way I just showed you this past week, where you can make anywhere from $300 to $500 a week. And then once you start doing better and you start gaining more and more capital, then you can increase your size to maybe 2 or 3 contracts, and you'll see that it slowly builds up. And by a year or 2, you're really making some nice gains per month. All right. So we're looking for that consistency. We're not going to sit here and promise you you're going to be hitting home runs each and every week. All right, now if you have any questions concerning what I went over today, anything about strategy number 6, or any of the other numerous strategies we have on the website, please do not hesitate to email me at stevenprimo@specialisttrading.com. In closing, I asked that you take one last look at my disclaimer. I showed you the performance results from some trades using strategy number 6 this past week, but remember, I can in no way guarantee that any of these results will be repeated in the future. So as you're taking one last look at our disclaimer, remember to email me should you have any questions concerning what I went over. And if not, please go to the video learning section and have a great, relaxing weekend. We'll see you here next week. Bye-bye.